And now we're just going to shift the perspective slightly. And instead of being an exporter, we're going to be a business that's sat in the UK and we're importing one of our in-scope products. Could be hydrogen, could be iron, could be aluminium, could be fertilizer into the UK. And remember, this also applies to precursors, including ammonia. So what will we need to do from 2027 in order to comply with the UK's carbon border adjustment mechanism? This diagram is taken from the UK government's CBAM website. If you are looking at how to get CBAM ready, I do strongly recommend looking at this website. It's very clear, very helpful guidance. And essentially, as an importer, you will need to calculate your UK CBAM liability by multiplying the imported embodied emissions by the CBAM rate, which will be a pounds per tonne figure published by government. Then you will need to net off any applicable carbon price relief. So if your supplier is in the EU, for example, and they're paying into the EU ETS scheme, you'll be able to net that off. And that net liability must be paid to UK government annually in the form of a tax. So as before, we can calculate our imported embodied emissions by multiplying the tons of imported material by the direct embodied emissions. So that's any scope 1 emissions from burning fossil fuels. Add that to the imported material imported times any indirect emissions from electricity, from steam. Add that to the direct and indirect emissions for any precursors, and that gives us our total imported embodied emissions in tons of CO2 equivalent per year. And CO2 equivalent, just as a quick reminder, is greenhouse gas emissions converted using their global warming potential into CO2. And the reason that we do this is just to give us a simple unit for reporting purposes. This unit is used in EU ETS, it's used in the UK's streamlined energy and carbon reporting. It allows us to make an apples to apples comparison between emissions of, say, nitrous oxides and carbon dioxide. And so just highlighting that because you will need to collect emissions data on nitrous oxides and certain perfluoride chemicals, particularly for, I think it's cement and fertilizer production. So just something to be aware of when you go out to engage your supply chain, that it's not just the straight CO2 emissions, there are also in-scope gases. The UK will be publishing default data, and it's a critical decision as to whether you want to engage your supply chain to collect actual data or whether you want to use the default values. Collecting the actual data, there's obviously a cost in terms of time, in terms of paying for third-party verification in collecting it. However, there's also a risk that your actual data, the carbon intensity of your imports is higher than the default data. And under the UK regime, there's no preference given. You can use whichever you want to. And so it really is a very important strategic decision as to which you want to use. And I do encourage you to begin engaging your supply chain so that you can at least get a back of the envelope idea as to what that is, so that when the default data is published, which will be available hopefully just before January 2027, but definitely by the 1st of January 2027, you can make that decision. I also encourage you to keep an eye on the UK government's website, where a list of accredited third-party verifiers will shortly be published. And then you can go out and you can start getting cost estimates for these things. But again, I think it really comes down to what is the volume of your imports. If you're importing £100,000 worth a year of in-scope materials, it's very different to if you're importing £500 million worth of in-scope materials. And that should be your sort of primary driver of this decision. What is the quantity that you're importing? Once you know what either the default imported embodied emissions or your actual imported embodied emissions are, you can times that by the CBAM rate to get your UK CBAM liability. The CBAM rate is going to be set by the government using the formula below. So it's an average of the emissions for a given sector, whereas the EU's, it's the worst case. And the government will be updating these quarterly based on their latest data. So as UK industry decarbonises, the emissions from domestic production will go down, and that will be reflected in the CBAM rate. And it also allows for a correction from free allocation adjustments. So as CBAM's been bought in, free allocation of ETS is slowly being phased out, which will increase costs for domestic producers. And so the CBAM rate, this formula is designed to reflect that. The carbon price relief is any carbon price paid by the producer that you are importing from. As an importer, it is your responsibility to hold verified evidence of any carbon price deductions paid. And so again, it's really important to start engaging with your supply chain to understand what they're paying, whether that's an emissions trading scheme, which to date, there are live emissions trading schemes in the EU, in Canada, in certain US states, in Australia, that you would be able to show a market-based price, so a variable price per ton of carbon paid. And then there are other regimes such as Singapore, where it's a flat rate tax. And it's important to understand, is it a flat rate or a market rate that your supplier is paying? Because then you'll understand how often your numbers need to be updated and where you need to get evidence from. The UK government allow you to use evidence of a liability. So if, for example, you are importing from a regime where a carbon tax is due to be paid, you don't have to wait until the end of your supplier's tax year to claim that carbon relief. So long as you can show evidence that your supplier is liable for a carbon tax of X pounds, you can deduct X pounds from your CBAM liability. And so say you're importing from a supplier that operates in multiple countries, you might have a percentage of what they're supplying that is eligible for a deductible carbon price, and that's where it's split out in the government's guidance. So if you are a UK importer importing more than £50,000 per 12-month period of an in-scope material, you must register with HMRC and submit an online CBAM tax return for the end of each accounting period. It's very similar to corporate tax. The accounting period runs from January 1st to December 31st. And in this first round, you're going to have 5 months to submit your CBAM return and pay any liabilities. It's likely that 5-month period will go down as the system becomes more familiar to people, but the government have allowed a little bit of extra time in this first round to give importers time to gather that evidence, particularly with respect to the carbon tax already paid by their supply chain.